Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Thursday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a sunny and beautiful Denver, Colorado. Thanks to all of you for being here with me today. I am pleased to be joined by my friend, fellow Schwab coach, Brent Moores, a longtime veteran of the markets. Those of you that watch these Trader Talk shows know that he's an excellent host and co-host, and he'll be there in the chat to keep an eye on all of you, answer questions that I'm unable to get to today. So please do not hesitate to post those comments and questions in the chat. Of course, I will keep an eye on things there too, because your questions, your commentary is certainly an important part of our discussion, especially on a Thursday when I'm here with you all solo. So make sure you're in there posting for the duration of the show. We will go about 45 minutes in total. Additionally, if you're not already doing so, please follow Brent and me on X, Brent Moores CS, Kevin Horner CS. It's a great way to follow your coaches outside of the classes that we offer for you here on YouTube. Try to post for you throughout the week, notable charts, pieces of data, interesting concepts, etc. That kind of stuff is what you'll find on X. So a follow there would be greatly appreciated. Now, we're going to move into our disclosures. And then I want to hit up some reminders on events that are upcoming real briefly before we get to the charts. But we got a lot to look at because we had some very big news or very big moves on earnings late yesterday, a multitude of upgrades, a few downgrades as well. So we're also going to try and incorporate a new example trade in today's class. So hopefully we can cover all of that for us today. So as a reminder, our conversation here is exclusively for your information and your education. We do not make recommendations. We do not make endorsements for a specific approach to trading the market here. We do, however, talk technical analysis. And as we do that, we'll remind you that technical analysis is merely a piece of the puzzle when it comes to making your decisions. We do not encourage you to make decisions exclusively based on technical analysis. It is important, additionally, to know that, of course, options carry a higher level of risk, not suitable for all investors. And in order to trade options at Schwab, we ask you to be approved on an individual account basis. That means you want to go through the paces to ensure that approval across the board on any account in which you might like to trade those options. All right, so with that, I want to take you to our agenda, which is going to be pretty standardized, everybody. More of the top-down methodology, of course. We're going to look at the major indices briefly. We're going to do that briefly because there are so many stocks to look at today, and we cover all of the major indices on Mondays and Wednesdays and Fridays, of course. So today, we'll just spend a little less time on it, but maybe focused more on maybe a little bit of management process, because there's something about this market today that many traders are going to say, hey, we had a great move to the upside. Does this mean that there's more upside coming? And that obviously remains to be seen. So we're going to talk a little bit more about management and the tie to our trades and ways that traders can look to capitalize on what have become fantastic moves here. Now, I mentioned we are going to give you a little heads up. Want to remind you of what we've got coming up in the near term here, everybody, on our external events where we come out to your local area. You'll already notice we're positioning for September. That's because these events have filled up. Every time we add a few seats where we have the space for capacity, they just get scooped up. So if you've not yet had an opportunity to attend an event, but you would like to attend one, please recognize they do fill up fast. So bookmark the page, schwab.com/events. Keep an eye for our upcoming ones where you have the opportunity in your area. We would love to see you come visit us for these events. Of course, it's just one of these deeper opportunities with us. Essentially, these classes that you attend on YouTube are what we're offering in the event, but we just do it on a deeper level for more of you. And of course, bring you out for a little continental breakfast and some lunch and an opportunity to shake hands with your presenters as well. So we hope you like those shows, everybody. We certainly enjoy doing them for you all, of course. All right, let's start us off with that S&P 500. We've got that big move here today, a nice healthy gap at the open. We are showing a red candle because we are trading under our open initially. By no means a negative at this point, but we have really been cruising to the upside. So many of you traders monitoring that 20 period moving average still. If you're a trend trader looking to take profits on weakness, you've not yet really had a reason to be doing so, right? Because every step of the way, pullbacks to the 20-day moving average have been opportunity to participate. They have not been reasons for selling, right? Because we still have not had that close below the 20-day moving average. Now, some of you traders out there might have decided that you are sellers into strength, might use today as a reason to take profits on a breakout. That may not make sense to all traders, but if you are looking at the market and saying, well, we are at 67, 68 days above the 20-day moving average. Yes, we are at new highs. New highs are not generally considered bearish, and yet a trader might be feeling a little uncomfortable, and that's okay. So recognize your comfort is what matters most. Try not to listen to all the noise in the market if you can avoid it. Obviously, our goal is to stay invested as traders as long as a trend is running. To this point, we've not yet had a break to the uptrend that began in late April. So if you're a trend trader, chances are you've been sticking with things, and right now, even still, you don't have necessarily a whole lot of reasons for profit taking just yet. But reminder, your process differs from everybody else's, all right? So put yourself in a comfortable position 100% of the time. And for a lot of traders after runs like this, building a little cash is not a negative. You want to have some powder on the sidelines ready to participate on pullbacks that give you the confidence to do so. Eventually, we're going to get one. And we know that because that's the way trends work. Trends work until they don't, and then when they stop working, we need to become defensive a little bit or change our process. I often used to suggest that trading the market forces us to be chameleons. We have to adapt to the way that the market is acting at any given moment, and that will change periodically. Sometimes that change will be after a quick month. Sometimes that change can be after a 3 or 4 month window like we're seeing right now, but eventually things will shift, things will change. But it's our job to make sure we're managing our process, managing our trades along the way. So great look at the S&P, great start to the day, up 0.75%. Let's see how this plays out over the coming day today and into tomorrow. Remind you, we will have some data in the morning with non-farm payrolls that'll have some opportunity to potentially drive the market. So be aware of that as well. All right, NASDAQ 100 up similarly, again, largely tied to the earnings that we got late yesterday. Microsoft and Meta both starting beautifully today. We will look at those charts. 20-day moving average here. You can see my ovals. Everything is consistent. Honestly, I can do this segment today talking about the S&P and the NDX both without notes because we've been talking about it for so long. April 23, that's the day we recaptured the 20-day. We remain above the 20-day. We've had 3 or 4 tests along the way. Selling on weakness has not given traders as of yet a reason to be reducing position size. There have been opportunities for participation rather than moving on to the sidelines or building cash. That stated, once more, your comfort with your exposure to the market is probably what should drive decision making rather than what you might be hearing from your favorite pundits on financial news networks. So for a lot of traders, managing the trend, not a lot of change necessary. But if you're looking at that 20-day moving average today, which according to my detail here is at 23,047 versus where we are in the market at 23,525, that means if you are a willing seller on a move under the 20-day, you got to be willing to give up 500 plus points to the downside to be encouraged to be a seller. Now, if you own an NDX specific position, well, then you have to do the math so that you know definitively what that means to your bottom line. If I'm giving up 500 NDX points, what does that equate to in terms of dollars? And if you can do that math and say, I can handle that, I can give that up, great. Then you can stay with your position. But if you say, hey, I don't want to give that up, what would I be comfortable giving up? You reverse engineer how many shares you should be sticking with or how big a position you should be maintaining, then that can give you the comfort to ride it for as long as possible. So hopefully that's a process that as we continue to reiterate the trend. Hopefully that's a process that traders are able to work with. But again, I cannot state enough the importance here. Tune out what you can. Tune out the noise that many traders call the headlines on a day-to-day basis. Try to work that out of your process as much as possible, and then make decisions that are in your best interest, that give you the comfort to stay invested the way you want to stay invested. Okay, now we have a little bit of a different scenario as we move off the S&P and the NASDAQ 100. Let's look at our small caps pulling back today. We're off about 1/3%. Now here we have some development as we are below the 20-day. We did close below the 20-day yesterday, and we have the confluence beneath us, the confluence of the 50 and 200-day moving averages coming into play. Now that I'm going to remove that oval briefly and just mention we are in a red candle below the 20-day, day 2. If that holds, we are making a lower low in our RSI as well. So this is notable. Doesn't necessarily mean action for some traders at this point. It is an intraday move, but having taken out or trading basically at yesterday's low, it is a bit precarious now, because if we move through the low with conviction, the low from yesterday with conviction now, we could witness a little bit of a momentum-based selling scenario here. And that's what we would obviously not want to see. But if we did, we have to evaluate an area that could be considered support. And I think it's fair to suggest, from a viewpoint of technical analysis, what has been horizontal support previously, or horizontal resistance previously, the 2170 area, and it happens to coincide with those 50 and 200-day moving averages. So reminder of what the strength of confluence can mean. A 50-day moving average trader from is a different window of time, of course, than the trader who is looking at that 200-day moving average, right? So a 200-day moving average trader is looking at a time frame 4 times as long as the 50-day moving average trader. But because those traders in two very different time frames are watching the same price, it basically strengthens it as an area of importance. Doesn't mean it has to hold, but it does validate that level as support. So a continuation of yesterday's selling and a breakdown in this Russell could mean a pullback to the 200-day or the 50-day or the confluence of them, somewhere in between 2165 and 2180 or something like that. We shouldn't be surprised to see that, right? Now, further, if we're trying to position ourselves properly and make sure we're comfortable, you might even say, I think it can go lower, and you should at least conceive of how you as a trader might maintain positions or cover positions based on weakness beyond what you think is an initial support. And ultimately, all I'm saying is, hey, you think that's a good spot for stopping, right? Any selling? That you might be right. But what if we're wrong? So always try to take it to the next level below so that you have an action course, a step-by-step process you will take if things go deeper than you anticipate. Not to say we have to do that, right? Doesn't mean we have to go lower, but if we do go lower and you were ill prepared for it, well, then that's more likely to encourage us as humans and traders to make hasty or poor decisions. And we want to avoid hasty decisions. We want to make decisions that have basis for them, right? That are rooted in a process. That's ultimately what we're looking to do. Okay, so there's your Russell, everybody. Let's take a peek at what's moving. Negatively, we've got a pretty good pullback all of a sudden here in the semis. 1 3/4%, almost 1 2/3. We have met resistance here at that 58.10 level a few times. Yeah, we held that 20-day as we talked about last week. This was very questionable. We tested horizontal support. Ultimately, we're in a range here, everybody. We're at 55, 65 up to 57, 5,800. So, a couple 100-point range, if you will. Now, when I look at this, and I think I'm not alone, but let's look at this. Traders, everybody, look at what we have. We've gone sideways in price, but we have a series of lower highs in the RSI. Now, the RSI has not made a lower low, So there's an opportunity for this to develop further into a lengthier consolidation. It's entirely possible that we maintain this consolidation range. But if not, well, then what becomes our potential zone for support? It could very well be that 50-day moving average down below, not too far off from where we are in the SOX, right? We're at, at 5,700. The 50-day is at 53.58. That's not going to feel fantastic if we had to pull back, a cup 330, 350 points, something like that. It wouldn't feel great, but it's certainly a possibility, right? So monitoring the semis here, very important for us as having been a big leader. But as Brent and I talked yesterday, the move that the semis have made off those lows has been tremendous. Even to where we are right now, sitting on the 20-day, everybody, we are up about 68%, looks like. Is that right? Yep, 68% almost. So, the peak's more than 70. That's a pretty incredible rally, all things considered, over the course of 80 bars. That is a total of only 4 months, everybody. So very speedy ascent here in the semiconductor space. All right, how about some sector action here, everybody? Noting the moves in the sector. What I like to do traditionally when I look at the sectors is to see where are we getting big moves one way or the other. Communication is a big one here today, of course. This is going to be on the heels of Meta's announcement. Big leadership there, as you know. And what you can see here, I'm going to go ahead and clear my drawing set. Looks like everything is, the trend has maintained here, everybody. So after a gap move like this, that 20-day moving average is going to need some time to get caught up, isn't it? My goodness, what an amazing pop to the upside here to be up 3% like this in a group. Now, granted, the communication space is not as large a sector as you're going to see in some others. And so leadership is very clearly defined as your biggest companies there, right? So Meta having a massive impact on this today, and we'll look at Meta's chart here momentarily. But a really nice development for those in communications and looking to continue to maintain the trend. I mean, everything we've said about the S&P 500, the NASDAQ 100 could be applied to the communication space here relative to the 20-day moving average. All of that looks very much similar, if not identical. What about tech today? Technology is up about 1%. More of the same here. Look at this. My goodness, RSI making new highs. So you're getting validation essentially of these new highs. But reminder that a validation in overbought conditions does not mean it has to only continue upward. Reminder, probabilities are what we're leaning into here. If we are looking to manage technology today and really any of our positions, the reminder I'll give you here is how some traders look at pivot points as being a little bit instructive on intraday price action. When you look, and we can look at this as well in some of these others, but when you take a peek at what we did this morning in the tech sector, we gapped R2. That's this ledge right here, the second red, into R3. Basically, our high was right at R3. Now, what is the pivot point? That's what this study is here, everybody. So the pivot, that purple line at 52.28, that is the equilibrium price for the day that is utilized or created utilizing yesterday's price action, open, high, low, and close, averaging those together, giving us an equilibrium price around which traders expect the group, in this case, the tech space, to trade for the day. But due to those overnight earnings, that fantastic report we got from a few, you had a gap move. And it is commonly stated that traders look at gap moves through areas of resistance or support as so instructive as to become short-term areas of import. In this case, when you have a gap move like this that takes out one of those levels, in this case R2, many traders would then suggest that intraday support is now the ledge you've gapped. So instead of thinking of the purple level at 52.28 as the pivot point for the day, the price level around which trades are apt to be most consistent today. Many traders would say that as long as it holds R2, you've got a bullish bias for the remainder of the day. Doesn't mean that it's going to go that way. We could easily close, get a trade under the low we just made in the last few minutes, and you could see a deeper sell-off. That's entirely possible. But that's what traders right now are probably watching for. Can we hold at a level here that would be opportunistic for the remainder of the day in a bullish scenario? See if that goes that way, of course. Unclear, way too early to know, but that's what short-term and intraday traders are likely watching here. All right, so that's intraday on the tech. Just because we talked about intraday and we're seeing some, there's not all that shocking in the S&P, is it, everybody? R1 in this case, not R2. We failed at R2 at the open, but this gives you something from a monitor standpoint here, right? So many traders would call R1 the pivot level for the day. Also happens to be coincident with the highs we created over the last 2, 3, 4 sessions here. So that gives you an area of support as well. And then we'll probably see something similar there in the NASDAQ. And sure enough. Rams, I can help you out with that. Let's take a peek. We can just go into our flask here, or beaker, take your pick. I know there's probably a few different terms that we could use. But we click on the study here. I've already got it added, of course, but we can go into our studies, go to pivot, start typing in. There you go. So I've added just the standard pivot points here. A double click will get it populated. All right. Once you have it populated, though, everybody, make sure you customize it. So open that gear and then work through here. Now, by default, R3 and S3 are not checked for show plot. So if you want to be sure to see R3 and S3, make sure you got a check mark in that box. And you'll notice that I've updated the levels, the lines here. I want the weighting of these lines to be a little thicker, a little heavier, so they stand out visually to all of you viewers. So I've made that change. And then one other thing here, everybody, when you decide to go about customizing these, the default is to auto here in values, and that values is going to change as you go across the various tabs like this. But in my case, I've changed them all from auto to numerical, and I've learned, I can't explain it, but I've learned that by changing it to numerical, everybody, that's what gives me the solid line, as opposed to, for example, if I make it auto on my pivot point, what you'll see is it changes to a dotted line there. You see that? So I don't like the dotted line. I prefer more of a straight line viewpoint. So that's why I've done what I've done. So I changed auto to numerical. And then last note, if these are studies that you utilize multiple times, then you might tell the system to save it as a default. And what that means is the criteria that you've saved, the weighting, the colors, numerical versus auto, etc., all of that holds. And the next time you decide to load that from the main studies page over here, it would load with your settings. Okay, that just saves you a little bit of time. And you can always reset to factory default levels at any point. Now, the last note I'll give you on this is that I also ask pivot points to only show me today's pivot point action. I don't need to go back in time personally to see those pivots extended over longer windows, but some traders do. The default is to show today only no, but I tell it yes, only give me the pivots for the current day. So just a heads up on how that's done, Rams. Hope that helps out in terms of getting it added for you. That's the process. And then, of course, don't forget, if you've got a set of those studies like I do, where in my 15-minute bar, I want to have pivot points and a 20-period exponential moving average, well, go ahead and save your study set. Make it easy to locate again so that you are able to quickly navigate to the studies you want on the time frame you want. All right. So you'll see here 20 EMA with intraday, or 20 EMA and the pivot points. That's essentially my 15-minute bar study breakdown. All right. Nice and clean. Pretty basic. Hope that's helpful, everybody. Always love a little teaching moment when we've got an opportunity to highlight some of those features and functions of Think or Swim. So what do you say we take a look at a bunch of intraday charts here on some of these big movers. I mentioned we had some upgrades, we've had some downgrades. Let's start us off with Microsoft. My goodness, everybody, Microsoft has just been cruising to the upside. Listen, it is really hard to look at what's been going on here and call this anything other than bullish. So we will not say it's anything other than bullish. It is quite bullish in nature as we've been moving along the 20-day moving average. Sometimes that can feel rather boring, but you know what? If you just simply bought the gap, which is essentially the gap move, is not given anything back. If you got lucky and bought the low, as of yesterday, you could have been up about 21%. Today, where we reside, you'd be up about 27%. But you know, when you think about what gaps might preclude, what gaps may suggest about price action, a lot of traders are believers that when you gap through major areas like a 200-day moving average, that it can be opportunity. And boy, that's exactly what's gone on with Microsoft here, everybody. My goodness. So if I kick this over to my 15-minute bars, we'll notice that intraday or yesterday late, we traded as high as 562. We created essentially a new level of short-term resistance to keep an eye on today. What do we know about resistance? Well, resistance is the spot when we rally into it, becomes the spot we expect stocks to pull back from, right? And that's what happened here at the open. We even tested that level right off the open here at the 7:30 window and have rolled lower. Now we're below the pivot. So, you know, what is coming into play here for the record, the system is calculating all of this after hours move to build the pivot point. Okay. So I'm just going to remind you that you can make a change here that would not encourage or incorporate rather the after hours move. If you only want to incorporate if you want your pivot point calculations, for example, to not incorporate after hours, well, then you would want to turn off extended hours trading session under equities here and look at what that does to the pivots. So you notice how the pivot, now we are way, way up there, right? So that's simply because we eliminated yesterday's huge after hours move and are applying the after hours move instead to the open today. Okay. Now that doesn't make one more valid than another. I just wanted to point out that it is important to recognize there is a difference here, because when you add in those after hours moves here, it absolutely is impacting the pivot points, right? And so the yesterday's average price, open, high, low, and close, is incorporating, you know, the 562 high, which is very much higher than the closing price of around 514. Okay, hopefully that's helpful, everybody. Obviously, we don't know necessarily what the next move is here. A little bit of profit taking off the open is not at all a surprise in Microsoft. Now, Microsoft did get an upgrade on this announcement. KeyBank analysts upgrading Microsoft to overweight. They had been at sector weight previously. New price target here at $630 a share after the Q4 report. The firm says that it fears of its downgrade that they applied in April have not played out. So essentially, the thesis that they assigned in April to downgrade Microsoft was wrong, is how I'm hearing it from KeyBank. Azure's growth accelerated 8 percentage points over the second half of Microsoft's fiscal year, and there was no mention of any macro headwinds on the earnings call, meaning that they're saying, hey, we don't have macroeconomic concerns about this at this time. And that basically, by not giving you any forward guidance of worry, of concern, etc., it is leading Microsoft, or at least KeyBank, to make such an upgrade here today, which is kind of notable, especially on a stock that has been already trending higher and made a tremendous gap move to the upside here today. Another one that had a big move. All right, let's go ahead and hit up Meta. Now, Meta, interestingly, I do not have a note of upgrade, I don't think. Let me see. There's an HSBC upgrade late today from hold to buy. Price target adjustment to 900 from 610. KeyBank holding. Piper Sandler maintaining. UBS maintaining. So just the HSBC upgrade, I think, is what we've got there on Meta broadly. But as you can see, a very similar development, albeit not as strong an upside move over the recent history as Microsoft had been in. But from a technical basis, certainly a break of what some traders might call a bit of a cup and handle scenario here. We've looked at the depth of the cup, so like so, and then you've got this handle portion here. The break of the downtrend line off these peaks, these lower highs over the last month or so, would be the breakout to the upside would be your validation of potentially more upside there. Of course, measured move wise, it's pretty crazy because the technician looks at this and says, well, we just take the height, the depth of the cup from the midpoint here, basically, right? The point that is the top of the cup, and we just measure to the bottom to get an approximation of where price could move. Now, this is why it's crazy, because when you add that, you take that line and you add it to the breakout spot, what are we talking about, everybody? That's like $1,000 a share. Really, really close. $9.94 for a measured move. Now, I'll remind you all, and many of you hear me say it frequently, measured move targets are just estimates, everybody. They're not a guarantee to be achieved in any way, but a trader may very well believe or expect that there's an opportunity for the stock to continue to rally. We're up 12% on this earnings announcement. So let me give you some headlines out of Meta's announcement here, everybody. So I'm going to pull that off so we can just stare at that candle. I will give you a quick look at the intraday. Obviously, again, having met resistance, traders are wondering, can we make a new high? And if we can make a new high, maybe then you'll see some more trend situation play out. Maybe this can rally into R1 up there. I did see a question real briefly, Rita, about your pivot points and specifically, which does one of these hold more information or more validation than another? Well, commonly, traders suggest that the actual pivot point, in my case, the purple line here, the average of the open, high, low, and close is what you should monitor. That stated, the R1, S1, these can act as support or resistance on short-term bases for traders, but they are not considered to be extended term. So meaning you might find them to work on an intraday, single-day basis, but the pivot itself, because it incorporates each day's new price action, you don't necessarily want that level to be the important one to monitor necessarily going forward. So just think of it as intraday, but try not to assign validation to one of these levels more than another. Price action kind of dictates that for you. I hope that makes sense. Okay, there were some, let me see here on Meta. Let me give you the rundown of Meta platforms. They say developing super intelligence is now in sight. It says 3.4 billion people using at least one of the Meta apps each day, which seems like a lot. Developing super intelligence, which it defines as AI that surpasses human intelligence in every way, is now in sight. They've established Meta Super Intelligence Labs. They're making good progress on this, and they say that their Prometheus cluster is coming online next year and thinks it's going to be the world's first gigawatt plus cluster. I need to learn more about what the heck that means, everybody. So for those of you in the know, feel free to let the rest of us in on specifically what we might be learning about a gigawatt plus cluster. I don't know about all of you, but I feel like I am swimming in AI detail, AI information. I need to learn more about it. And the more we know, the easier our processes should become, of course. But try not to simply trade without having an understanding of what these companies are really up to. It can be extremely helpful to understand the underlying detail of these businesses, of course, as you are trading. So try not to ignore what they're up to. Beyond that detail, we had Citigroup raising the price target on Meta to 915. That's up from 803, keeps a buy rating. Meta, it was not upgraded, but raising the target at Citizens to 900 from 750 with an outperform rating. KeyBank analysts upped the price target to 905 from 800. Wells Fargo raised to 811 from 783. Bank of America raised from 775 to 900. And JP Morgan raised from 795 to 875. So lots of bullishness there, everybody. Really hard to look at it as anything other than that. And yet, not everything that we expect is necessarily going to go the way we want it to or the way we expect it to. But my goodness, what a fantastic start to the day for Meta. All right, let's keep looking. I've got a few more in breakout scenarios and upgrades. One that we want to talk about briefly here has been in the midst of a bit of a pullback was CoreWeave. Now, CoreWeave, here, we're trading up a little bit. We're at 116. If yesterday is the low in the pullback, well, then you could suggest that we're trading above the high of the low day today. We are in a downtrend still. We still have lower highs along the way. We are below the 20-day. We have been from at least since July 7th, so about 3 weeks there. CoreWeave was upgraded by Citigroup to buy from neutral with an unchanged price target at $160 a share. Now, the firm closed its 90-day negative catalyst watch on CoreWeave. So that was Citigroup's negative catalyst. They were concerned. And of course, when you look at it here, what they're stating is they have closed that window. So the 90-day window in which they were concerned has changed. No longer is that the case. The stock is off 45% from its peak. Citi still expects trading volatility around their share lockup, which expires on August 15. So that's notable, but they do believe that CoreWeave's fundamentals are stronger after Microsoft's earnings report. It sees accelerating growth for the company in 2026 on ramping contracts and positive artificial intelligence demand. Now, given that we have A, an upgrade, and B, a possible close above the high of the low day, we could potentially start a new trade here. And I thought, so from an example basis, let's go ahead and do that. We're going to stick with it as a very basic order. We're going to build an entrance with an exit strategy below the low we just made yesterday. That way, if we trade to a lower low, we're going to call this a bad timing and we'll move on. But hopefully what we get is a reversal that could be utilizing this upgrade as a catalyst for shift. So we can put on a position and we can put a stop underneath that low. Now, how would we define the low and what we use in terms of our stop? Well, we're going to incorporate an average true range as well. Now, unfortunately, that means we've got to risk $11 below the low if we want to incorporate the ATR. Now, why would we incorporate the ATR? Well, we would hope that it would allow us to maintain the position for a longer window of time. And meaning that by giving it $11 to the downside below the low we made yesterday, well, the likelihood is that we would be taken out on legitimate weakness as opposed to general or broad market weakness, if that makes sense. We've seen this play out before. In fact, we can look at one of our the example trade we have already working in the account momentarily. But because it is $11 and because we feel based on A, the catalyst of an upgrade, and B, the potential for a trade through the high of the low day, we could go ahead and just say, let's keep it nice and tight. Let's limit our risk. Instead of adding 10 points below the low we made at $100.80, let's just go a little bit below it. Let's limit our potential here because we're still looking at about $16 of risk. So if we are willing to risk $16, everybody, we're going to need to start looking for about 40 to 50 to the upside. Can we theoretically conceive? Can we do that? And I think a lot of traders would say, yeah, we could. From 115, if we were looking for 40, it would give us 155. And 155 would be into the vicinity of this price action right in here, right? And we could also just throw a volume profile up there, which might also potentially validate price level for us. Let's see if what we learned by throwing up the volume profile. Okay, so that's interestingly enough, that range there, 155 to 160, is where we have a massive volume node there, everybody. So there's been a lot of volume up there. That could be a spot for a rally to pause if you kept. Now, obviously, we could pause at the 20, we could pause at the 50, we could pause at the value node here as well, 145. But we could absolutely build the trade. So let's just keep it nice and tight, everybody, with an exit under 100 or so, and an entrance at market. And we'll just see how this goes for us based on the catalyst that we have here. Whoops, I don't want to just go for it. So we're going to right-click, buy custom with stop. So we will enter at market, but our stop, we set it right under 100 would make some sense. So we'll just come beneath it by 8 to 10 cents. What do you say? How about 99? Yeah, 94. That was a great year. Great year. I loved 1994. So let's go back to then. We'll go ahead and use that. 99.94 for our stop. Good till canceled. We acknowledged the risk. I'll remind you all that a stop order is just a market order once it triggers. That means even though I like the idea of being stopped at 99.94, we could get executed at a price well below there. We have gap risk, everybody. So let's go ahead and go with it. We'll see how this plays out. All right, there's our example trade in CoreWeave. And then I mentioned the monitor position we have in the account. Oh, we got long. I'm going to go ahead and move that trade into my Trader Talk grouping. We have that RTX position that is just pausing a little today. We moved the stop order up for us last week at all of your encouragement, I'll remind you. Let me put the order on here so that we can see where are we. We are right here at the 145.27, and we've been incorporating ATR with us, everybody. This thing has just kept moving. The 20-day here is at 151.28, and if we want the $2.80 ATR, well, then we can just add take 281 beneath 151.28. And the math suggests that we could, at 280 beneath that, we could raise our stop to 148.48. Currently, our stop is at 145.08. This is a wonderful development in our example trade because we have the opportunity to try and capture an additional 3 points to the upside today. Last week, we only added an additional $1, about $1.50 actually. So if we raise the stop to 148.48, we are working to gain additional profits in the trade here. So let's go ahead and right click. We'll cancel replace this, changing our price from 145 and change. We're going to make it 148.48. So we're going to raise that stop. Now, again, the reminder is once triggered at 148.48, we have a market order to sell. We do not have any guarantee of price, but our opportunity is to try and maintain the position as long as possible. And remember, a couple of weeks ago, everybody, we had that stop right below this big green candle when we busted the 20-day moving average on an intraday basis. It won't work every time, but it was the fact that we used the average true range to give us the price level for our stop that kept us in it. Because if we would have put a stop very close to the 20-day or even within a reasonable amount below the 20-day, we would have been stopped out on that and missed this additional upside move. It's up 10 or 12 points from there, right? That would have eroded a majority of our profit situation. And that's why many a trader will incorporate average true range in their process. Doesn't make it 100%. Nothing is as it relates to technicals, everybody. You all know that, though. All right, I'm going to remind you that there are stocks in the downgrade world. I'm just going to point out one of them in our final 60 seconds. United Health got a downgrade today from Baird, downgraded to underperform from neutral. New target dramatically reduced. Was 312, now at 198. Not a great look for United Health. The firm sees more challenging roads ahead for United Health following their Q2 report. It has low conviction on the company's ability to maintain a 1% Optum Health value-based care margins in 2026, and they believe that United Health's other segments now appear more challenged than originally anticipated. What we're looking for with downgrades, everybody, are downgrades that are met with buying, something that you would consider to be other than the norm. This is less than ideal for United Health, obviously. So it's a possibility, but it maybe could mean some more time struggling the way that it has if it's going to get booted from the Dow, as you're asking, Bill. I don't know. I really I will not speculate on any of that. But all right, we are at time, everybody. As always, love hearing from all of you. Thank you so much for joining me today for Trader Talk. Remember, we'll be back a little bit later today. I've got the After the Close segment at market close, 4 p.m. Eastern. But you can keep it tuned right here to the Schwab YouTube coaching channel for the remainder of the day. You've got live content all day long. So thanks for being here. Don't forget to follow Brent and me on X. Hit that thumbs up button down below for us. We're going to archive this one for you as quickly as we can, and that'll help us get it out to all the masses as we go forward. So appreciate all of you. Have a great rest of your Thursday, everybody. I look forward to seeing you all again real soon.